Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live mortgage rates for a few programs, and then we're going to do a deep dive into fix and flip loans. Give us just a moment here to go live on all the platforms. We do appreciate everybody tuning in nice and early. I see some comments already coming in there in the chat. Go ahead and drop any comments you have there in the chat as you tune in, and we'll get started here in just a moment. Great topic here for today that everybody loves to talk about. So we'll go through some really cool options we have for some fix and flip loans here today. And it looks like we're live on all the platforms, so we'll go ahead and get it started. Go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat. We'd be more than happy to answer them after we go through the presentation on fix and flip. So feel free to put any questions you have in the chat there. But we will go ahead and get it started here. We'll take the chat off the screen for now and get into it. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for a few different programs. Then we do a deep dive into a different loan type, and today's loan type is going to be fix and flip loans. So we'll go through some cool options for that. But first, let's check out the rates for today. So Nick, if you're ready, let's go ahead and pull up today's rates and see what they are looking like.
All right, continues to be good news, and the rates continue to drop. So we'll check out the rates for today. It is September 11th, just after 11 a.m. Eastern. So all of our standard programs here are live with their initial rate sheets. We'll set up a standard scenario, compare the APR across the programs. If you'd like a full breakdown and itemized loan estimate that itemizes all the fees, please get with one of our team members. We have over 300 loan officers to help you out. For the demo, we set up a standard scenario as we do every day, standard single family home. We'll do 500,000 purchase, 400,000 loan amount. That corresponds to 80% LTV, 20% down payment. We'll set an estimated 760 credit score and an estimated 40% debt to income ratio. So let's check out the rates today. So pretty amazing here. We'd love to see the rates go down, and some more good news today for rates. So it should continue to go down throughout the day. First up, our 30-year fixed conventional for a primary home. Typically the most common option people think of when they think of a mortgage. 5.625 rate coming in this morning. Final APR 5.939. And if for any reason our customer doesn't qualify for a standard conventional option, typically the next option we want to quote is an FHA. FHA allows more leniency on credit issues and a higher debt to income overall. And FHA comes in today, 4.875 rate, final APR 5.829, including the mortgage insurance. FHA requires upfront and yearly mortgage insurance. Now, if our customer qualifies for both options, appears FHA is a touch cheaper, but remember it does require that upfront and yearly mortgage insurance. So definitely a decision that they would need to make. And moving on to our VA, definitely some good movement there as we keep seeing everything drop below fives. Awesome. VA is coming in today for our eligible veterans and active service members, 4.99. Final APR with a standard funding fee here, 5.287. So notice if our customer qualifies for VA, it's going to be much superior to FHA or conventional. So definitely a great option. Anybody that's eligible should definitely take advantage. And the final standard option here, USDA, only for properties in rural areas, the USDA eligible areas. The property is eligible and the borrower is eligible. These are great options to consider. Rates as low as 4.875 today. Final APR 5.589 with the standard fees here. So notice if our customer is shopping in these areas, they're going to probably compare to an FHA, which USDA is going to be a touch cheaper and cheaper than conventional as well. So definitely a great option for customers in those areas. And that rounds out the standard options that any bank or lender has. And if our customer doesn't qualify, unfortunately, they may have to deny the customer. But we have 5,000 plus other options, starting with our non-QM alt doc here for a primary home. So if customer doesn't qualify with conventional docs, 2 years of tax returns, needs to use alternative docs, we switch to this program. We can use bank statements, 1099s, P&Ls, all kinds of different options. Rates today for bank statement or similar, 6.125. Final APR, 6.450. As usual, within half a point of conventional to switch to alt docs. Absolutely amazing. And we can use alt docs for investment properties and tons of different options for investments. So first up, our alt doc option for investments, bank statement or similar, 6.625 rate. Final APR, 7.042. I believe that went down a touch from yesterday, which is great. And we'll compare that to our other investment property options. First up, our conventional. We don't have any government options, so no USDA, FHA, or VA, but conventional does work for investments. Rates as low as 6.5 today. Final APR, 6.838. And the next option is our favorite option, which beats conventional today. Absolutely amazing. Our DSCR, no income, no employment needed. Just simply use the estimated rents to determine a DSCR ratio for these loans. The estimated rents can cover the estimated expenses. That's a positive DSCR ratio over 1.0, which is preferred. For all these demos, we put 1.5 so we can see all the best programs. This 3-year prepayment penalty option went down from yesterday, which is amazing. We love to see the downward movement. Rates as low as 6.25 today. Final APR 6.516, beating conventional. Absolutely amazing. And we can sweeten the deal with a 5-year prepay coming in today at 6.000. Can't wait till this drops below 6. That's going to be amazing. Final APR 6.321, beating conventional. Absolutely amazing. And our final DSCR option is a no prepayment penalty option. Not going to quite beat conventional here with no prepayment penalty, but very comparable. Rates as low as 6.75, final APR 7.080. To do DSCR when we have no prepay, which is very comparable to conventional. I'd still say 100% of investors would prefer a DSCR loan in this case. And the final 2 demos. Second mortgage is very popular these days. Many customers have still a low rate first mortgage, lower than the rates you see here, and still want to get cash out. No problem. We can do that instead of using a HELOC, which is the traditional option. We have these new 30-year fixed second mortgages for a primary home to get cash out. Rates as low as 8.125, final APR 8.527. Again, lower rates than a HELOC, not adjustable like a HELOC, and non-QM programs, so we can use bank statements and similar. Same option for investment properties to get that cash out. Rates as low as 9.5, final APR 9.739. And again, HELOCs are rare for investment, so this is an amazing option for investors to get that cash out, even up to 80 LTV with a second mortgage. And now we'll switch to our topic for today, something that we can't quote live, unfortunately. But Jose, our expert here, can go into details on one of the most popular products, fix and flip loans. So these are loans that are very specific with specific requirements and are very popular, but are difficult to quote because every deal is in and of itself a quote. So Jose is going to make some big assumptions today on some deals, I'm assuming, and give us some numbers. But just remember, every deal is different when it comes to fix and flip. So Jose, what do you got for us today?
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Fixed flip loans, those of you that may have caught our Burr training the other day, this is the integral purchase loan usually for the fixed flip transaction. This is a loan that then the investor will refinance out of when they're looking to fix and hold as opposed to fix and flip. This is a short-term bridge loan. All fixed flip loans, whether you're going to hold it or whether you're going to sell it, they still call it a fixed flip loan, just like they call a DSCR loan a DSCR loan, right? So this is a short-term bridge loan, interest only. Depending on the ROI, which is return on investment in the deal, you are able to build in interest reserve. So in some cases, if there's a good profit in the deal, you may not even have to make any payment directly out of pocket. It can come directly from the flip. All of it can come directly from the flip. Most importantly for the investor, I call these fixed flip loans credit preservation or credit score preservation loans, basically, because the investor does not use his personal credit, like credit cards, for example, to renovate the property. Because if they have the intention on keeping the property and refinancing into a DSCR loan, they definitely need to have that credit score in good shape. And you know what happens when you run up those credit card balances is you lower the scores. So definitely investors out there, the successful ones, use the fix flip loans. And when you consider that for a highly experienced investor, with at least more than 10 or 15 flips in the last 3 years, they can even attain up to 90% loan to cost, which would mean they only have to give 10% down at the closing for the purchase, and then the rehab is financed at 100% of the rehab cost. That would be absolute best case scenario. So let's see the scenarios that I have for you today to see if how close our flipper gets to that 90% LTC unicorn. So in this scenario here, our investor has 10 plus flips in the last 3 years, and it's a fairly profitable flip. They are getting 87% loan to cost, only 12.5%, 12.5% down payment, and a rehab is funded at 100%. So let me show you the breakdown here. So we have $115,000 is our purchase price. Since we are getting 87.5% loan to cost, we are at 12.5% down payment, or 14,375, and this is the fixed flip loan analysis. Here we have 30.49 ROI, right? $210,000 is our ARV, and here's where you can see the loan to cost and the ARV LTV, right? And here's our flip details. We had 115,000 as is value, 115,000 purchase price, 26,000 in rehab, and this was our interest and our discount total cost. So that's how the numbers get calculated, and the end result, since it is a profitable flip, is what you see here: the nice low interest rate, low cost on that rate, and high loan to cost. So this is our heavily experienced flipper gets a sweet deal. So now conversely here, so you can see the same scenario, the same ARV, the same rehab budget, purchase price, everything, credit score. The only thing that I changed in this scenario was that our investor now has only one flip in the last 3 years instead of 10 plus. And the difference is that the loan to cost is reduced to 80%. That means that our flipper has to give 20% down. Still a good ROI, hence they still get 80%, which is still very good. So $92,000 is the disbursement at closing, $23,000 is the down payment, and the rehab is financed at 100%. And there you see the ROI is still very good. The gross profit, all the numbers are good here, and he gets 10.74 with 1 point cost actually on that one. So let's go back now and look at another common scenario: the fixed flip delayed finance refinance. Right now, our same flipper with 10 plus flips in the last 3 years experience. And this is where the individual purchases the property for cash and then is looking to refinance to get the money back that they put in, plus do the flip. So here our borrower gets $80,500 disbursement at closing, which is pretty cool because I had it set up that the purchase price was $80,000. That's what they paid for the property. And now he's going to get that initial money back. Plus, he's going to fund 100% of the rehab. So these are our numbers. Our loan to cost is 73.23, and our ARV LTV is 50.71. Right, so 10.24, and that is our information right there. So very good deal. He gets 10.24, and it's 1 point charge on that rate. So they get to recuperate the cash that they laid out, and they get the full 100% of the 26,000 rehab budget. That's the key here, folks, right? You're getting 100% of the rehab, and in this particular scenario, he gets all of his cash money back. And our last scenario here is a fix flip refinance. This is where someone purchased the property with hard money or some type of financing. And in this case, again, I'm going with the $80,000 debt, and they want to refinance the debt, right? So it was purchased with debt, not cash, and then they want to also get rehab. And in this case, you're looking at 10.74 interest rate, and the borrower gets 69,000 out of the 80,000 that he owes. So the borrower is going to have to come up with some money at closing, $11,000, but they will get 100% of the rehab financed, right? So we can see the breakdown right here. Our ROI, our loan to cost of 65.47%. And this is our deal here. And our borrower paid, in this case, he paid 1.25 points. Little riskier transaction. So you've seen here the 4 types of transactions typical for a fixed flip loan: the straight out purchase with heavy experience, the straight out purchase with light experience, the delayed finance refinance when they bought it cash and now they want to get their cash back and get the rehab, and the refinance of the existing loan that they purchased it with, so that now they can get renovation money instead of using their credit card. So great examples here, and awesome for all of our investors who we love to work with, because we love financing the purchase of the flip, and then we love financing the refinance when they exit out of the flip into the hold.
All right, perfect. I do not see any questions here, but definitely great programs and options there for our flippers out there, or soon to be flippers. Don't see any questions still, so we'll go ahead and wrap it up. Remember that we do the show at 11 a.m. Eastern every weekday, where we go through the live rates and then we do a deep dive into a different loan type. So we will see you all tomorrow with a new loan type at